Hey everybody, what's going on? KSA Kris here, the Real Estate Blitz, and today we're going to talk about cap rates and figuring out where they are in your market. So first off, what is a cap rate? So I'm going to read off something real quick so that way I'll give my own spiel, but I want to be very specific on what this is because a lot of people don't know. So the capitalization rate, which cap rate, is the rate of return on real estate investment property based on the income that the property is expected to generate. The capitalization rate is used to estimate the investor's potential return on his or her investment. Now, with that said, whenever I look to invest in buy and hold properties, or I give recommendations to a client to invest in a buy and hold property, I'm looking for 1% return per month on the total investment. So what is the actual, if I bought a house for $100,000, I spent $100,000, right? I want to get a 1% return per month on that total amount of money that I spent. So you're looking at roughly, if there's 12 months in a year, that's a 12% return annually on the total amount of money invested. So that's your return, 12%. That's what I usually recommend. Now, not every market is going to have that. I would even say in San Diego, where I'm physically in, San Diego, the going cap rate right now is about 5.6%. It's not a bad return. If you look at the stock market and some of these other things, in my opinion, working with real estate is a better return because you're not dealing with a whole bunch of other unknowns. So these are what you're looking for when you talk about this. There's three. You're looking for the cash flow, which is the actual rate of return, the cap rate, right? That's cash flow. You're looking at the depreciation because there's only two ways to make money. You make more or you save it, right? And depreciating the property when it comes to taxes is saving money. Therefore, you have a higher return. And then the other one is you're basically going to the appreciated amount of money, so the equity that home or that property is going to get over the next however long you're going to own it. Most people are going to try to buy a property and hold it for 5 years because after that, it gets harder to depreciate that property. So I want the appreciation. And after 5 years, it should be worth more than when I bought it. So you're getting the 12% return, plus you save money on taxes, plus you're able to make, I don't know, $100,000, $200,000, $300,000, $400,000 over 5 years for the appreciated total that when you sell it, that's also a return that you could add to your overall total rate of return that you're getting. You're all right? Return on investment. So the big one I want to talk about today is where are your high cap buy and hold properties, and I think it's important that you understand what buy and holds are. You understand what a cap rate is because if you are working with investors or you're working with people, and I'm going to do a few videos on this. If you're working with people that may want to sell a home to purchase a home to get a better cash flow, right? Which is a 1031 exchange. We do a lot of 1031 exchanges here. You need to understand where's the good spots in your market. So here in San Diego, there aren't really good spots. Ideally, for us, we go outside of California because you're going to get a better return. California, of course, doesn't like that, so you've got to deal with those separate laws when you talk about 1031 exchanges, etc. California's going to try to get their money if they're selling a property to purchase property somewhere else. However, if you want to stay in California, we go out and we find the markets where those cap rates make really good sense for investors, and then we say, hey, this is what's available. We actually go out of our way to meet the agents that specialize in those types of properties in those markets, so we try to get the first look at everything that's coming through so we can go and pitch it to our investors. So this is my recommendation. You should know what this stuff is. If you don't, you need to get after it. If you don't know where to turn to look at it, this is what's beautiful. We have Google. We literally have Google. You can learn everything and anything about cap rates. You can learn everything and anything on how to do the math to figure that out. I gave you a very basic example. So a $100,000 home, right? I want to make 1% per month on principal, which is the total cost of that home, which is $100,000. That means I want to make $1,000 per month on that property. I'll give you another quick example. I had a client recently. She's bought and sold a lot of homes with us. She had a home, and I'm going to do a video that goes a little more in depth on this one here in a little bit. But she had a home. It was worth about $420,000. She walked away with about $400,000 when it was all said and done in net proceeds. She got the home from her mother. Her mother has medical issues, and she needs to make $6,000 per month. She was renting that property, I think, for $1,200 per month. It was like nothing. if you do the math on the cap rate on something like that, like she is just losing. That is a major loss of money. So what we recommended to her through education, we says, look, what if we told you you can get the $400,000 and put it into a property that will pay you 1% per month on that. So that's roughly $4,000 per month. She says, that's fantastic. It's way more than I'm making right now. I says, what if we could take the next level and cover your mother's medical expenses and also put money in your pocket? She's like, really? Yeah. So this is what we're going to do. We're going to sell that property. We're going to have $400,000. We're going to go get a loan for 50% more for another $400,000. So now you have $800,000. We're going to leverage, because the inflation rate is very low right now. We're going to leverage it, and we're going to get you in while rates are low. So she ended up getting a loan at 3.25%, and now on that other 50%, she's still getting a 1% per month return, so 12% total, but she only has to pay annually 3% of the total 12%. So she's still up on 50% of that at around 9%. That's fantastic. That's fantastic. Okay, that's a killer return. So now she actually covers off selling a house that she was making $1,200 on. It was her mother's house, and she inherited, and she had fear. She was holding on to it for dear life, because she's like, if I sell it and I make $400,000, I'm going to run out of money eventually from paying my mother's bills. I says, true. So you're just good with making $1,200 a month. So that way she only has to come out of pocket, a little less than $5,000 a month. She's paying. I says, what if I showed you how you could sell it, leverage, and purchase investment properties with the 1031 exchange, so you're not dealing with taxes either. And you're basically going to put money in your pocket, cover your mother's expenses, and now you're able to depreciate that property and write it off on your taxes, and it's going to appreciate. She bought, I think, 10 units or something like that in a market where we're at, and she actually gets a better return. I think she's getting like an 18% return, something like that. So that's fantastic at the end of the day. We're actually looking to sell another property for her that she has, and we're going to roll that into a property that we're looking at for a 32% return. 32%. Think about that, right? Think about if you get another $400,000 and then you leverage for another $400,000. That's amazing. It's basically free money. So, one, go out there and learn this stuff, because you need to understand what it is so you can educate your clients. Two, try to tie up with a really good 1031 exchange company in your market, because they're going to give you videos and education that you can pass to your clients, and it's going to teach you as well, and you can always have somebody that you connect with. Three, go out and find those quality cap markets. There's going to be niche markets wherever you live, or try to find them in other states if you can. So when you start building this out, you actually can direct your clients to buy and sell through you, because you know what you're doing. That's all I got today. Do me a favor, like, share, comment. As always, check me out on YouTube, check me out on Facebook, and please, 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 leave some comments. I love the comments. I'm very blessed, and I love it when people write me. And I always make sure I personally reply to everybody within 24 hours. I usually try to reply right away, but sometimes it's like people reply really late. I just think it's so cool that people from all over the nation. I had a guy reach out to me this morning from Boston. I've talked to people in Jersey. I've talked to people in Alabama. I've talked to people in New York. All over. It's just really cool. I get a big kick out of it. So leave me a comment. I'll always reply to you, and I'll try to give you any information I can. That's all I got today. See you tomorrow.